And first on our radar is Rossari Biotech. The first management on the show reported a mixed set of numbers despite softer domestic market conditions. So to discuss this and more, we are joined by Sunil Chari, who's the co-founder and managing director at Rossari Biotech. Thanks a lot, Sunil, for joining in. And, it was the quarter that it was. You also said that the EBITDA margins were also lower because of ongoing investments in future initiatives. If you could give us a sense on what those investments are, how much they amount to, and X of those investments, how did the performance do? What is the kind of growth that you anticipate in the future?
The new initiatives we have increased the team strength in our Rossari professional business, which is the cleaning, hygiene and disinfection, which we could say semi B2C kind of business. We have also increased the team substantially there. I think we have added about 100 people in sales there. We have increased the spend on exhibition expenses. Travel has increased a lot. And if you see our 9-month gross margin, it is 469 crores against 403 with the corresponding 9 months of the last year. Exports have done significantly well. We are at 156 crores. It is the highest ever exports. At 512 crores is the highest ever quarterly revenue ever in the history of Rossari Biotech. So I think we have done well. Even in the 9 months, if we compare exports, it's about 405 crores compared to 317 in the previous year 9 months. In terms of other initiatives, there is increase in R&D. The R&D team has been doubled. So we are going gung-ho on spending for the future, and we also have the new capex, which we think will come up in line in March, end of this quarter or April in the first quarter of next year.
Okay, so Mr. Chari, let's break this down further and go step by step. We'll come to the expansion and the capex in a bit. But let's talk about, the demand trends that you've seen, because apparently in the domestic market, you've seen softness and the export market is doing better for you. How prolonged will this softer patch be? What can you expect? Because profitability is down year on year, and there's been a lot of pressure on your EBITDA margins as well. So let's talk about the domestic market. What's going on and how prolonged will this weak patch be?
I think we are seeing a small pickup already in the domestic market. So this quarter we should see better numbers in the domestic market. Export continues to be strong for us. In terms of, I would again reiterate that we should look at our gross margins now, which are 469 crores in this year compared to 403 crores last year. The fact that we spend more on growing for the future puts down the EBITDA a little.
Just to update us, what is your domestic versus exports mix right now in the revenue? And since exports are doing much better, those markets are growing much better, where will you be by the end of the year? And if you could tell us, what is the average growth rate across your export markets, across the main business verticals?
We were at 23%, averaging in the previous quarters and the previous year. And now we have nearly 30% of our sales is exports. So we believe in earning in dollars and spending in rupees now.
And growing at what clip? I mean, I'm asking, these are different geographies, different product lines, but ballpark, what's the clip at which the export business is growing?
Export business, year on year, we were at 317 crores last year in the first 9 months, and now we are at 405 crores. If you see last quarter, quarter 2 of this financial year, we were at 130 crores, and now we are at 156 crores. So export is growing at a phenomenal rate.
All right, and you said you expect some recovery in the domestic business in the second quarter. Let's talk about not just the fourth quarter, which is coming by, but the next couple of years with the kind of investments that you are making. What is a sustainable growth path that you're looking at for the company in terms of revenue? What would the margins entail when the business grows at the clip it does? Because new capacities will be coming on stream. You will be increasing your utilization there as well. Do we see it growing above this 13% that you've guided for this year? What could the number be?
I would be cautiously optimistic for the coming quarters and the coming years. Let us see how it pans out. But we see, good opportunities for us to grow, both in terms of EBITDA as amount, because we're focusing as EBITDA as amount instead of EBITDA as a percentage, and also, the top line. We should see healthy growth in the coming quarters.
How do you define healthy? How do you define healthy, Mr. Chari?
I think if you see when we came during our IPO, we were a 600 crore company with a 80 crore EBITDA. Today, we are now, nearly 260 crores EBITDA. So we've grown well. In the next 4 years, 3-4 years, we should hope to emulate, what we've done or do better than was in the past 4 years.
All right, so we'll take you up on that as the business grows along. Just final question: animal health, that has been one of your pun unintended pet projects. How fast do you expect this to scale up, and are you looking at any sort of demerger here at some point?
No, we are bullish on our animal and nutrition prospects. There has been overcapacity in the Indian market, in the Indian poultry sector. But we have added new people in R&D. We have added new products in our R&D, and we are sure that this will grow very well in the future.
Okay, all right, Mr. Chari, we will leave it on that note. Thank you very much for joining in and giving us a heads up on the business trends and what you're expecting ahead in this year. We'll take a break right now, come back on the other side, and we'll focus on the F-Note trends at midday.